How do I explain this crazy real estate market? Well, stay tuned. We're going to get into the data. Hi, I'm Theresa Wellman with HomeownerExperience.com. Today we're digging into the closed stats for March 2022 for San Jose and surrounding areas. So I really want to get into the data today because I know buyers out there are frustrated. It's multiple offers. It's a crazy market. Sellers are trying to take advantage of these crazy prices. But I want you to stay tuned because I have a leading indicator I want to share about the market. So it's important for you to hear that. So let's go ahead and look at the computer and talk about the actual stats for the market today. Okay, so here we start off always with the Santa Clara County chart. As you can see, Silicon Valley is at a new record high price. We have just shot up really high again. The average price is over $2.33 million. What? This is single family home data only, but still that is really high. We'll get into the condo data at the end. The supply is still very low. Look at this yellow dotted line. There's only a couple times that we've seen this, usually in the winter, and here we are at the end of March and we still have those levels of inventory. And the demand is really up. Multiple offers, 18% over on average. And the 29th month in a row that prices have been up year over year. So up, as you can see, which is just crazy. The average is 21.9% more than a year ago. So pretty good appreciation. So now let's look just at San Jose. The thing that really jumps out to me, prices of course in San Jose are going up, but is this dotted blue line here? That is the pending sales. We are at, look at this, a record all the way back to 2012. We have not seen this number. We're barely touching the peak in 2021, but that was much later in the year. So there is just so much demand from buyers out there, and yet still very limited supply, partially because we're selling them so fast and we just can't keep anything on in the inventory. So as you can see here, this dotted yellow line, there are many times winters where we've been at this number and we're trending upward. So I expect that inventory to change. Let's see. The supply, again, record low at 276 single family homes at the end of March versus the 10-year average of 568 homes. So as you can see, there's quite a shortage. So the only thing that I wonder about is the demand. Is the demand going to slow down because interest rates have gone up so significantly over the last month? We'll touch on that a little bit later, but I can tell you one of the leading indicators that I'm seeing is that the number of offers on properties is actually going down. In January, properties I was selling were seeing 15 to 20 offers. In February, around 10 offers. And in March, we're looking more around 5 offers. So affordability is getting more difficult and therefore less offers on a property. That's telling me we might be getting close to a point where the market might actually level. Not go down, but level out a little bit and actually catch up. The comps catch up with the actual sales price because right now things are just selling so much higher over. Let's look at that actual numbers. So here for San Jose, you see 18.7% over asking. So we just can't catch up. Those pending prices are much higher than the previous close. And so the new sales are selling way, way over that. The average price in San Jose, remember Santa Clara County was $2.33 million. That includes, of course, Los Gatos, Saratoga, Palo Alto, some of the higher end markets. In San Jose, we are at 1.852. So still a very strong, very respectable price for the average single family. That's up 4% from last month and 21% from the year before. 71% of homes are in contract. That's a little less than before, and I think that's just primarily due to the inventory. We just don't have enough inventory. The sales price to list price ratio we covered, but if you look at it, it's been holding about 18%. Last year, it was only 10% over, so significant jump from the year before. And days of inventory holding about 20 days, so less than 3 weeks, pretty spectacular. We've closed 408 homes. That is up from last month, but actually down from a year ago slightly. I think, again, inventory is just lower, and so we haven't been able to catch up. So if you look here, the number of pending sales is up to 680. Yeah, that is a record. I went back and looked at that, and you know what? Over 10 years, all the way back to 2012, we had not seen that number. It's up 20% from the month before, up 5% from the year before. And as you saw in that chart, actually the pending sales kind of dabbled pretty high last year, but not quite as high as 680 homes. So as I mentioned, prices are continuing to go up, but there are less offers coming in. So maybe a sign that we'll start to see some settling and plateauing of the prices. Overbidding record high again. It beat the previous record from the month before. And you know what? It's just a really strong market. Now, hopefully you understand why this market is so crazy. High demand, higher pending sales than ever, and very low inventory. Combine that supply and demand and you just get strong prices. So the good news is inventory is starting to ramp up. Obviously sales are as well. So I'm hoping that we get more inventory here coming soon, just so that buyers have more choices to get into a property. Let's see if those prices do start to level out like I talk about. So here is a huge increase in the interest rates. For a conforming loan, we're at 4.67. Now, in this area, most people don't have a conforming loan. They have a jumbo loan. But I tell you, jumbo loans are still in the 3.75 to 4%. So a little bit less than this, but they've significantly gone up from even just a month or two ago. So that is, I think, part of the reason why the number of offers is decreasing. And the prediction before was that we would be close to 4% by the end of 2022. But you know what? We're already there and surpassing it. But keep in mind, the averages over time are more in the 6% range. So we're still well below normal averages. But yes, prices are up. So affordability is much more difficult. Here's the S&P 500 versus the average sales prices. You see that both numbers have gone up and they're tracking each other again. So that is kind of what we expect. If they continue going up, the stock market, then likely prices will continue to go up, except that interest rate piece that we talked about. Unemployment. Okay, continuing to drop at a very healthy number at 3.6%. Obviously, people buying houses in San Jose and Silicon Valley have good employment, good stock options to help them make these high dollar purchases. So how's the market in the condo area? Well, it's a little bit different, but you know what? The really surprising thing is condos had really high inventory last year, or relatively, and they are at winter levels still in March. And the demand has gone up. I think as companies are opening back up, young buyers are trying to get in. And look at this. The median price in condos is over $1 million. So you know what? If you're a first-time home buyer, you're likely buying in that condo townhome price point, because that is a really high price point. And therefore, you're going to be competing in this market. You know, the thing with condos is they did not appreciate as much over the last couple of years, really not much at all. And I think we're going to see that appreciation make up ground in 2022. So hold on tight if you're in the condo market and be aggressive with your offers. So next, you really should check out my last couple videos about interest rates. I don't know if you saw the one about interest rates over time, or the should you buy now comparison, looking at different dollar amounts and different interest rates and actually running some real numbers. Check those videos out. If you like what I share here, please do like this video or comment below with more information I can help you out with. Thanks for watching.